Hello friends, this is going to be the Ethereum video for today. Now thank you very much for joining me. We've had some horrendous price action on the go. Let's just take a wee close look at that and see how it shapes up, shall we? So thanks for joining me in the chart, and we're just starting off here where I actually kind of left off in the Bitcoin video with the DMI up on the screen, the big old directional movement index. Now I'm not going to explain how this indicator works in this video, but I will point out the sort of the components. These are the out of box colors on TradingView as it happens. So maybe you're familiar with them anyway, but the orange line is the negative, the blue line is the positive, and the ADX is the red line here. And you can see the ADX operating above the 20 area, which is where we would look to in crypto land, especially for how we would use this line, and it's trending to the upside, so the strength is increasing, and of course of the trend, and of course the negative line and the positive line are diverging quite dramatically, and that's increasing. So we looked at that yesterday's video. I believe we looked at it in yesterday's video, and said, hey, the strength is increasing. So that's actually still the case. If you were wanting if you wanted to sort of check back in with that again as well, in terms of the other things like the MACD divergence potential that could potentially have been showing up there for we could have been creating bullish divergence, and it's obviously silly to speculate like that. And I always point it out that you shouldn't trade based on stuff that hasn't happened yet, or whatever anyway, since the charts aren't predictive, and then to predict what would happen on a non-predictive thing, you're compounding your risk doing that. So but you can see that that's kind of undone itself, and with this big old candle here on the, or bar or whatever on the MACD, there's no divergence there. The RSI, which is our friend, we tend to put that on the Rocky Outcrop Titian channel as being the sort of the most important of the three in terms of looking for divergence. And yeah, well, it wasn't divergent to begin with. And the stochastics, well, the stochastics are doing this sort of funny thing here where they're still looking slightly divergent, and part of that is a function of my smoothing. So if I just put it back to the out of the box settings, then you can see that that's not actually divergent here. So maybe I'll just leave it on that for now, shall I? Since that gets rid of that divergence and makes it seem more like to actually represent the reality of what's been going on. Now, I normally use it with a bit more smoothing on there than what we can see here, but that's fine. We'll just go out the box settings. Now, I got rid of this trend line in yesterday's video, but it's back. Mustn't have saved my chart. So yeah, so what have we been looking at? Right, what's happened here? Let's just zoom right on into the price action for today. We're looking at the 24-hour BitMEX perpetual futures inverse swap contract, of course, as we normally do here. Makes very little difference where you look to be honest, with an asset that's got such good liquidity as Ethereum overall, but this is a pretty good one. Now, of course, what we've been looking at, well, we had this channel and this line here, and we changed it from being a descending broadening wedge because we said, well, hey, that's giving us a bit of positive bias, and there's no need for that. And when the market's trending to the downside, I might as well remove any bias. So we made it into a channel instead of a wedge. Smart thinking overall, because it made it so that it was a bit more sort of strict when it came to the end area. Of course, if this was a sort of broadening wedge and you had it in like this, then maybe you could even say that we're still inside this broadening wedge. Maybe you could still be saying, hey, there's a potential for this to be a bullish pattern. Subjective nature of these things is obviously lends itself well to sort of interpretation. You could be putting it like this and saying to yourself, hey, I expected to come back up here and be above this area by the end of the day, or maybe even tomorrow we could be above here, and then you get sort of confirmation bias of your wedge shape and everything else. Now, I'm not going to say that that's not the case. I'm just going to say that that leads to confirmation bias, of course, and having it as a channel here, and it being a bit stricter, I suppose, in terms of like breaking out of it, that was kind of better suited. And of course, as well, we had this moving average coming in here, and for me, that's I've got it set currently to 233 because that's a Fibonacci number. And if I could click on it properly, then I could show you 233. But we also usually usually use the 200. I just changed this up recently for the crack. It doesn't really matter overall, particularly because they're both telling us more or less the same thing, that this channel here was at the bottom of it was rather important to break down past that. You'd be breaking down past these moving averages as we did. And of course, then we had this Magnolia line here, and that's the 236 from the Fibonacci retracement from the highs in June to the lows in December. December. And where have we gone to? Well, we've broken right past that. So we've undone all of the good work here. And you could say in a sense that it was actually these Fibonacci retracements, right? Fibonacci retracements are to retrace are to show potential targets in a retracement against a move which was the prevailing trend, and as with the opportunity for you to actually continue the previous trend, but how much might you correct in between times? And so if we were to continue the previous downward trend, that would be this one, looking towards coming down here and going past this 100% mark and continuing on with it, then that would be how you would kind of look at this in a broader perspective. Then what did we do in between times and during our correction? And well, we went up as high as a 618 and actually a bit beyond here. It really depends as well, I suppose, how you drew this in. We went wick to wick here, but of course as well, it'll depend on what exchange you're on and everything else too. And these things are not these with Fibonacci's and stuff like that. We don't use them as exact targets and stuff like that. The close enough is certainly close enough, and a bit too far, well, that's fine too. So anyway, we didn't actually make it as high as a 786 or whatever, but we made it up to sort of our other crucial areas of support and resistance that we'd known about in the past, and came all the way up there and then all the way back down again. So we got up above the we got into that golden pocket for sure, and you can see that there's a couple of outlier days really, but generally speaking, we were in that sort of golden pocket area of the 618 and its little sort of and beyond, and then we come back down. So you could look towards the future and say, well, will we enter back into a downwards trend here and start, and will this just be considered to be a sort of on the bigger time frame, like the daily, this would be a high and this would be a lower high, and then we could go on and maybe set in a lower low, and where could the next one be? Well, if this was just to be a lower low compared to this previous low over here where we had a Fibonacci drawn in at, where would the next area be at? And I think that's probably the wisest way to do this, because we already know the upside targets. They're all of the ones that that essentially weren't respected on the way down, and you've got two areas I suppose I'd look to, and I'm being fairly sort of generous I suppose with these lines here by putting towards the bottoms of where they were before. The next two areas that you'd be looking to, and these numbers will be no surprise if you've been trading Ethereum for quite a while. It's coming in at around about $100 and then $79, where we know that the price action has been to in the past over here anyway, back in sort of December 2018 area. So we know that we've seen the prices down here before. That those would be the next two areas to be sort of aware of or scared of or whatever. After sort of $115, should we go down as far as that and break down below? Now, could we actually come on up here from this area and look towards upper sort of higher targets? Could we have possibly have made as much of a move as we were going to make? We could have. Over here on Ethereum, you can see this isn't much of a head and shoulders at all or anything like that, but if I just wanted to point out to people who maybe aren't watching both videos, that there was if you consider this to be a shoulder here, this to be a head, and this to be a shoulder here, this to be your neckline, and this to be your measured move, then we actually had a head and shoulders on the Bitcoin price chart, which was pretty much fully satisfied with this move down the way. In which case, you could maybe think, well, maybe that's run its course, maybe, but you don't have that on Ethereum. Absolutely do not have that on Ethereum. You've got this. You'd only have this as your shoulder here, and there's anyhow. So could we be looking, if we were to be looking towards the upside? Now this is just if we were to be. I'm not a financial advisor. No, this is financial advice. But my first area of sort of where to look to would be 155 or so. That you got this. This has acted as support here, and it was resistance here. And then looking to the left, you can see a couple of more instances where in and around this area, whether you want to say 155 or you want to say 160 or you want to say 150, it's entirely up to you. I'm completely comfortable with the fact that there's a lot of subjective nature involved in doing your sort of your charting. I'm going to stick it in there somewhere between 155 and 160 as a sort of general area and say, look, this would absolutely be a profit taking target should anybody be long in this here. Now I'm not a financial advisor, now this is financial advice, but of course as well, my next sort of profit taking target should you be shorting it would be down at that 116 area. Would I trade in this particular exact zone that we're at right now? Well, not really. Wouldn't be over eager to. However, could you potentially say that maybe we've found some support in here at this area over here, and this is going to end up being a higher low than that? and that overall perhaps we're turning around the broader trend. You could put, if you wanted to be sort of quite, crazy bullish. In fact, I'm just going to get rid of this channel, by the way, because we don't need it anymore. It's done its job. Could we be like bullish about this and say like this year's was our first high? We broke all of these previous highs that we had, and we've set our first high there, and that our previous low then would be this area here, and we're going to come in and set in a higher low, and anywhere as far down as the crazy $116 having been up at 275, anywhere as far down as that could be an area for a turnaround for us. Yeah, you kind of could, but we'll not get carried away. But if you were to do that, then you could draw on a Fibonacci retracement here, going wick to wick more or less, and of course you've got this 155 area, but we would need to see the prices come up above 163 before you could look towards any upward side targets. Okay, so if you're wanting to be long right now, and you've got some sort of idea in mind, that just a feeling that you want to be long or something like that, but you don't know where to be looking to, well, that's your answer there, 162. And I would expect to see resistance there. Absolutely. Of course, we've got this horizontal line here, so we already knew that was the case, but I would absolutely would. But then you'd have to also open and close above that area before you could look towards any of these upward side targets. And it's no coincidence really that you can see things like the 618 coming in right where we had a horizontal before, the 382 right on where there's other horizontals that we've had in the past. These levels here, they're sort of more or less self-explanatory, and that makes a lot of sense as well when you consider like this low over here around about the $100 flat area, and things like that, where our previous target was around about that $300 area to the top side. That the maximum that we could have really been greedy wise to look for in moves would have been up there at $300 and potentially 310 if we were going up. So like, we know that the numbers are kind of round, easy maths numbers. So that's really what that is. We can see so we know that there's no divergence or anything else to be written at home about, to be mentioned, and that the trend is strengthening to the downside. So what can I say? That we're not going to. I'm not wanting to jump in on the tweezer bottom, buy the bottom bandwagon or whatever right now. I'm not going to just start speculating wildly towards the downside, because really yesterday when we were saying that we don't have the horizontals down below, this would have been it. This would have been my wild speculation. I'm not going to then double up on that today. So yeah, thanks very much for tuning in. Thanks very much for joining me for this episode, and I'll see you next time.